Hey everyone, welcome back to Corporate Decoder, the place where we make sense of complicated company reports. Today we're diving into the BlackRock Municipal Credit Alpha portfolio, because who doesn't love the thrilling world of municipal bonds? Just kidding. But stick with me because hidden in this report are some clues about how your investments could be impacted. And before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Join. This is a prospectus, which is basically a sales pitch with a lot of required legal details. BlackRock, one of the biggest investment firms in the world, is offering shares of its municipal bonds. These are bonds issued by cities, states, and other local governments to fund public projects. Agaj is the goal to give investors attractive after-tax total return through income and capital appreciation. Here's a key thing to know. This isn't your typical investment. It's an interval fund, which means it doesn't let you just cash out your shares whenever you want. Instead, the fund makes offers to buy back a portion of your shares. In this case, quarterly offers to repurchase between 5% and 25% of its outstanding shares. To think of it like this, the company store is opened only 4 times a year, and it might not be buying everything you are selling to it. The fund's directors have already decided on some repurchase amounts for the next few years. Think of it like this, the company store is opened only 4 times a year, and it might not be buying everything you are selling to it. The fund's directors have already decided on some repurchase amounts for the next few years. Think of it like this, the company store is opened only 4 times a year, and it might not be buying everything you are selling to it. The fund's directors have already decided on some repurchase amounts for the next few years. For fund directors, amounts for the able to sell your shares when and or in the amount desired. So what's this fund actually investing in? The goal is to put at least 80% of its money into municipal securities. These are investments that pay income exempt from federal income taxes. The fund will focus on municipal bonds that are rated in the medium to lower categories. The fund may invest in bonds rated below buy by Moody's or below bid by S&P, also known as high yield or junk bonds. This is something to consider, as junk bonds are called junk for a reason. As we mentioned before, this fund is an interval fund. This is another key element to be aware of. It basically makes the fund able to offer some but limited liquidity to shareholders. It is not like an exchange-traded fund where you can buy and sell shares at any time of the day. The fund plans to use leverage, which is basically borrowing money to invest more. The fund plans to invest in 2B residual certificates from tender option bonds in an amount up to 33.13% of its managed assets. This can amplify returns but also magnify any losses, while the fund may want to borrow money from banks or other financial institutions, issue debt securities, or issue preferred shares in the future. It is not currently something they plan to do. Let's take a peek at what you will be paying for the fund. The fees and expenses you'll pay depend on the share class you choose. All share classes have a management fee of 0.90%. Institutional shares do not have a distribution and servicing fee. However, Class A and Class U shares have an ongoing distribution and servicing fee of 0. Have an ongoing distribution and servicing fee of 0. Class A and Class U shares and Class U SAV. There's within annual services and other expenses, and providing ongoing services, there are also interest expenses and other expenses. With all this in mind, here's what we get, assuming the use of leverage and with all fees included and accounted for. The total annual fund operating expenses for institutional shares are 1.86%, but are 2.61% for both Class A and Class U shares. Here is a quick example on a $1,000 investment, and assuming a 5% annual return, here's what you might expect to pay in expenses, but remember, this is just an example. After 10 years, institutional shares could cost you about $218, Class A shares $312, and Class U shares around $294. Scroll urine 073124 scroll. Now let's look at how the fund has actually performed. We are checking information for a share outstanding throughout the period. Starting with net asset value, it's starting with net asset value, it's starting at asset value, it started at however 19th third total return based on net asset value was 4.76% to add. However, it is important to note that since the fund recently converted and changed investment direction, these financial highlights show the fund as a listed closed-end fund and not as an interval fund as it is now. Looking at ratios to average net assets applicable to common shareholders, total expenses were 3.97%, with net investment income to common shareholders at 3%. At the end of the period, net assets applicable to common shareholders were over $949 million. The portfolio turnover rate was 40%. Like all investments, there are several risks. Here are a few: closed-end interval fund, illiquidity of shares. The fund is designed primarily for long-term investors, and as an investment, shares should be considered illiquid. There is no guarantee that you will be able to sell your shares when or in the amount desired. Investment risk. An investment in the fund's shares is subject to investment risk, including the possible loss of the entire amount that you invest. The shares are designed for long-term investors, and the fund should not be treated as a trading vehicle after repurchase offers risk. The repurchase of shares by the fund decreases the assets of the fund, and therefore may have the effect of increasing the fund's expense ratio. Distribution payment risk. The fund cannot assure investors that the fund will achieve investment results that will allow the fund to make a specified level of cash distributions or year. Totia increases in cash distributions, or year Thea increases in cash distributions, or year distributions. Or year increases in cash distributions, or year to year increases in cash distributions. A municipal market is one in which dealer firms make markets in bonds on a principal basis using their proprietary capital. The amount of public information available about the municipal securities is generally less than that for corporate equities or bonds. The secondary market for municipal securities also tends to be less well developed or liquid than many other securities markets. In addition, many state and municipal governments that issue securities are under significant economic and financial stress and may not be able to satisfy their obligations. The use of leverage creates an opportunity for increased common share net investment income distributions, but also creates risks for the holders of shares. The fund will be subject to credit risk with respect to the counterparties to the derivative contracts entered into by the fund. If a counterparty becomes bankrupt or otherwise fails to perform its obligations due to financial difficulties, the fund may experience significant delays in obtaining any recovery in bankruptcy or other reorganization proceedings. The fund may invest 25% or more of its managed assets in municipal securities of issuers in the same state or US territory or in the same economic sector. If the fund does so, this may make it more susceptible to adverse economic, political, or regulatory occurrences affecting a particular state or economic sector. While interest rates have been historically low in recent years in the United States and abroad, inflation rates have recently risen significantly. And the Federal Reserve and other central banks have recently been raising interest rates to address inflation, which among other factors has led to markets experiencing high volatility. The investment activities of the advisor and its affiliates and their respective directors, officers and employees, and in the management of or their interest in their own accounts and other accounts they manage, may present conflicts of interest that could disadvantage the fund and its shareholders. BlackRock has adopted policies and procedures designed to address potential conflicts of interest. The fund may leverage its assets through the use of 2B residuals, which are derivative interests in municipal bonds. The 2A residuals in which the fund may invest pay interest or income that, in the opinion of counsel to the issuer of such 2AB residuals, is exempt from regular US federal income tax. 2AB trusts constitute an important component of the municipal bond market. Any modifications or changes to the rules governing 2B trusts may adversely impact the municipal market, and the fund's charter includes provisions that could have the effect of limiting the ability of other entities or persons to acquire control of the fund or to change the composition of the board. The fund is committed to maintaining the privacy of shareholders and to safeguarding their non-public personal information. Now, let's break down what all of this actually means. It is hard to really assess this new kind of fund with so little financial information. But here's what stands out. Municipal bonds can be relatively safe, but this fund is going for the lower rated ones to get a higher yield. The interval fund structure and the use of leverage create some significant risks to keep in mind, most notably the fact that it is an illiquid investment. If this fund does not sound like you might want to pass at alright. That's our breakdown of this BlackRock fund and its conversion to an interval fund offering municipal bonds. Kenjoy. That's our breakdown of this BlackRock fund and its conversion to an interval fund offering municipal bonds. What's your take on this new structure and what it signals for the investment world? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.